Get ready, insiders and people who don't want to live on popular noise. What I'm about to say will make you think about what you know about XRP, Ripple, and cryptocurrencies in general. This isn't just chart talk. Like this, we can understand why the market moves the way it does, who gains when consumers panic, and how liquidity events happen before the news even wakes up. There is something else going on below the surface right now that is quiet, methodical, and strategic. While small investors jump at every little dip and experts drown you in trend lines, XRP is getting close to a situation that leads to a sudden price change instead of a slow rise. I'm talking about a move that is driven by liquidity and can change the whole story in days or even hours. And you're not early if you're only responding to news stories. You're exiting the market. Before we go any further, please click subscribe and like, because missing the right time on this move costs you more than just gains. It can cost you power, resolve, and the ability to stay calm when everyone else is trading noise based on their feelings. This is the main idea. The markets don't change based on how you feel. Markets move when there is less money in them. Flow of money goes first. Now for the headlines. In addition, XRP is different because it has had to change quickly. This is true whether you like it or not, and shape is made by pressure. Let's talk about what's going to change. Most traders don't pay attention to the right things, so the signs we're seeing right now are stronger than what they think they are. They keep an eye on price. They look at the timeline. As a leader, they watch, but they don't pay attention to the parts. And the truth is, in the physics, it's been quiet, but XRP has been making moves that point to one thing: getting ready for large-scale academic use, not just guesswork. That doesn't mean there will be a moon tomorrow. It means that the factors that usually come before big flows of capital are coming together, and those factors are exactly what lead to events with very high volatility. Those kinds of changes that make people worry and sell at the bottom and then have FOMO by the top. Yes, there is a reason why the market feels like it's being pushed and pulled all the time, since it is. The story is traded in stores. Institutions buy and sell the building. Now, what does that building look like in real life? Start with what's happening on the chain and in the record. There is something important going on. When the number of daily transactions goes up slowly, when liquidity pools get smaller, and when wallet clustering shows accumulation patterns that don't match up with normal retail behavior, the market is not being pumped up, but rather placed. Most people miss this part. Building up doesn't always look like a big green candle. There are times when it looks like boredom. There are times when it looks like suppression. It looks like never-ending chop sometimes, which wears people out until they give up. That's the game. First, wear out the crowd, then move the object. I'm about to say something that will make people angry. That's okay. The truth doesn't care about making you feel good. A lot of FUD isn't meant to tell you anything. It's meant to make you shake. It makes things unclear at a time when big players want the smoothest entries. That doesn't mean all bad news stories are fake. This means that bad stories can be used as an excuse, especially in areas where it's easy to change people's minds. And XRP's retail base is one of the most sensitive in all of crypto. That's not a bad thing, it's true. Emotions make things unstable. Volatility makes chances appear. Chance brings in a lot of money. Let's talk about the institutional side now, because this is where the story changes from crypto talk to how money works in the real world. You can spot a trend when you hear rumors about banks testing corridors, when people talk about cross-border settlement infrastructure, and when Ripple's partnerships grow outside of the most popular news cycles in the West. It's not until after the experimentation step that institutions say they're experimenting. It is quiet when they move and when they confirm. They only speak out loud when the pipes are in place, whether it's testing, research, pilots, or hallways. This is what you should think about when you hear names like JP Morgan, Citi, and Santander. It's not the text of the title, it's what drives them. Institutions don't care what you believe. They want to cut down on friction, speed up the process, make payment more reliable, and lower the cost. That's why the important question isn't, is XRP a perfect system? When it's talked about as a bridge asset, can it do the job better than what's already there? That's the important question, because capital will try it if it can. And if capital tries it, the market will eventually change how useful people think the asset is. This is where the SEC factor comes in handy. This is what most people get wrong. They see delays in regulations as pure bad news. But delays also make a huge discount for doubt. And prices for uncertainty are exactly what smart money loves. If you can build up during uncertainty and then the uncertainty goes away, you will have a repricing event. That is the whole plan. It's not true that institutions wait for everything to be clear. That's not how markets work. Institutions wait until things are clear enough. They wait until the risk can be measured instead of being felt. As soon as you can measure risk, you have to place yourself. So, know what the SEC is doing when its story changes, when there are delays and questions. It makes stores responsive. It makes the story more complicated. The market stays cheap because of this. Long-term strategy is built at that very moment. Let's talk about the sets that make moves that are deadly. The ones that make people think, what is going on? A few common types of triggers can work together to set off a chain response. First, there is governmental inflection. It's not always a big win or a dramatic announcement. Sometimes it's just a change in tone, a step in the right direction, or a solid sign that the way forward is clear. Second, speeding up partnerships. It's not about making one more deal. It has to do with network effect velocity. As soon as more than one corridor, region, or institutional train starts to connect, it will happen faster than the market can price in. 3. A cash shock. This one breaks the charts. When there aren't enough sellers and demand comes at the wrong time, price moves quickly because there aren't enough buyers. That's when spaces appear. That's when the lights stand up straight. That's how shorts get caught. Fourth, relax your position. The market doesn't just go up if too many people are short or underexposed in one direction. It breaks, and that snap is what makes the buys keep coming. Covering, allocating, and acting like I have to buy now are all things that are pushed. This is exactly why big changes will happen that don't make any sense to people who only watch the news, since the news didn't make them move. It was the setting. It was just the match in the news. To finish, let us talk about one of the biggest problems with the stories you read online. When people talk, they mean it. XRP to the moon. XRP is no longer useful. This is a promise. This can't happen. That is not an argument. It's called emotional branding. To do real analysis, you need to know about probabilities, triggers, and danger, because XRP can move quickly, but it can also stay low for longer than people think. That's why it's such a powerful tool for businesses and a trap for shoppers who don't want to wait. That's not the question. Will XRP go up tomorrow? The question is whether you are paying attention to the signs that let you know when a volatility event is about to happen. In simple terms, here's what to watch. Keep an eye on whether the amount of action on the blockchain is rising steadily or just randomly. Keep an eye on wallet behavior to see if it clusters in a way that is typical of bigger players or if it shows scattered retail buying. Check the liquidity level on the big venues. Keep an eye on whether cash is decreasing even as interest rates rise. That's a common state before a breakout. Keep an eye on whether partnerships keep growing without being noticed. Pay attention to where things are. Asia and the Middle East are often the first places to try out new payment systems, and the West sometimes catches up later. It's not a rumor when you see signs coming from more than one area over and over again. You're seeing a moving world. Most importantly, keep an eye on how people feel. The stage is often set when everyone in the crowd is tired, bored, angry, and sure that nothing will ever happen. The market likes to move when no one thinks it will. Let's go one step further, what the price goals are and what might happen. This is what I will say. A repricing event happens when the value of an asset goes down because of uncertainty, and then it goes back up as uncertainty fades and infrastructure usage speeds up. Events that are being repriced don't move in nice numbers. They take steps. They're not touching. They go too far. They make happy candles that change the story in real time. This is the reason why people who wait for proof buy after the move. They're just running late because they think they're being safe. It costs a lot to confirm. On the other hand, positioning too early without a plan can also kill you mentally. So, what's the answer? You need a plan that includes steps, timeframes, and ways to handle risks. If you think a liquidity event is about to happen, you set yourself up so that you can handle fluctuations. You don't use too much force, you don't risk the rent, you don't bet everything on one light. It's smart to build a position with the knowledge that the market can stay crazy for longer than most people can handle. Because this is what no one tells you. It's worse to be impatient in the market than to be wrong. You can be going in the right way and still lose money if you take too many risks and do not plan ahead. Now, let's talk about the big mental trap that most buyers fall into and lose. FUD news stories. When you see a scary story, ask yourself, does this really change the system? Or does it just change how people feel for quick changes in how people feel? Things change more slowly. Price doesn't move slowly. When systems change, though, it moves very quickly. When XRP is really seen as a test case for larger payment experiments, even if they are only at the pilot level, the market prices in a future set of options, things that are possible, not certain, are what start big moves. That's why it's not smart to believe everything. The smart move is to pay attention to the signs, be open to the unknown, and take a firm stance. The main point is now time to bring it home. XRP does more than just move. Setting it up. There is no question that instability is on the way. It's about how mentally ready you are for it to happen, because this market won't politely let you know when it snaps. First, it will move, and then everyone will act like they saw it coming. There will be fear in stores and precision in institutions. Shorts will get tangled up. Buyers who are late will chase. People with power will change the past, and most people will explain everything after the fact as if it were clear, even though it wasn't. The real benefit for you is this. Don't trade on the news, start keeping track of the weather. Do not open the wallets. Keep an eye on the cash. Keep an eye on the network. Keep an eye on the governmental turning points. Listen to the relationships, especially the ones that aren't loud. Also, make a plan that doesn't depend on how you'll feel on the day of the move. This setup is called a systemic shift. Not a promise, not an omen, not a dream, a plan. You can also stop being fooled by noise if you learn how to spot setups.